Good afternoon. It's McCollum on Business Friday edition. I'm Stephen McCollum. For the next 30 minutes or so, I'm going to get you updated on what's happening around the business world. We'll look at the markets and see how they're acting today. Of course, we started off this short week after the MLK holiday with a big sell-off. A couple days of getting that sell-off back and getting into the positive. So we'll check into that here in just a moment. Plus, we're going to look at stocks we're paying attention to and the national and local stories you need to know going into this weekend. Let's get started right now with that Market Watch. We had the consumer expenditure report yesterday that came in at 2.8% inflation, if I remember correctly. Yeah, everything else is kind of here. Now, tech is up today because of some news out of China. All the chip makers, the NVIDIA chip, that H200 chip, well, China now saying that agencies can order it over there. So that's leading tech up here. But right now, you can see the Dow Jones, well, that's down 333 points right now to 49,001. The S&P 500, well, it's barely down right now. It's teetering on that pretty much even area there, 6906 for the S&P 500. NASDAQ, for some reason right now, isn't registering, but that's the only one that is positive here today. 58 points up right now to 23,504. Again, led mainly by tech up. Obviously, that's a tech-heavy index. That's pushing the S&P here to that equal side as well. And then the Russell 2K, that small-cap index, way down today. 48 points down today to 2672 for the Russell K. And then 2K, the Bitcoin, back up to 90,000 here today. Been down in that high 80,000 range last couple days. 90,638 for Bitcoin right now. So here's how we're going to end it, right? We're going to end the week here as some of these are going to end up probably close to even or maybe barely up here after kind of just a up and down week here on the markets in terms of the indexes. Stocks we're paying attention today. First one we're going to look at is Intel, folks, and look at this. They reported their numbers yesterday, and needless to say, the market was not impressed. 16.78% is what Intel Corporation is down here today. Mixed fourth quarter results for them. The problem is, the big problem, weak forecasting is what they put out there also in that call yesterday. Intel expects first quarter revenue will be between $11.7 and $12.7 billion. Their adjusted profit breaking will be breaking even there for their profit side. Analysts, well, they were expecting 5 cents per share, and they expected $12.51 billion in revenue for the company. So disappointment here for Intel. 16.72% down is what their stock is right now as well. Manufacturing troubles is what they talked about in their earnings. The manufacturing troubles that they're having obviously is a big deal, overshadowed their results side of it. Intel today, yikes, way down 16%. That's yikes is our professional business term we use when things are shockers out there. Next up in the stocks we're looking at, Bosch Health is one. Pharmaceutical stock out there, also down today, 9.44% for this company. One of its experimental treatments missed the targets. This is all in that late-stage clinical trials. And when you get to a late stage, that means you've been positive on the other stages. You get to that late stage, you're right there at about being approved. When those fail, the stocks really take a beating, 9.36% down based on that. This was the treatment for hepatic falafel. I tried, folks, right? Basically, that's a disease and a condition. I don't know if it's a disease, but a condition where toxins build up in the blood, hurting brain function. This is for patients that have liver disease. So they were going through a clinical trial to help out that. In all seriousness, I don't know how to pronounce it. For that, and the treatment is not going well in the late stage. So that's why Bosch Health is down 9.28% here today. And since we're in that clinical trial stuff in terms of companies that do, things like this to solve health problems, let's put it that way, we're going to look at Moderna next. I was trying to figure out how to phrase this casually here because Moderna's down as well, 5.86% right now. They had a 4-day win streak going up until today with this 5.78% downside. Well, their CEO came out and told Bloomberg TV that Moderna doesn't plan in investing in new late stage vaccine trials, all because of the U.S. opposition to immunizations. Obviously, that's a big part of their business. That's why they're down 5.76% here today for Moderna out there. Later on, when we come back and do our final look at the stock market and the market watch here for the week, we're going to look at Clorox. They're in the news today. Life 360, that tracking company for kids. A lot of people use it for kids, right? They're driving. That's what I use it for. See where the kids are causing trouble at, but mainly controls their driving, shows us how they're driving. They're in the news today as well. And then Capital One, right? A lot of talk on this 10% credit card fee, among other loan stuff. So we'll look at Capital One as well later on when we come back. But first, let's get you updated here on the national side of things in terms of stories that affect business out there. And the we got final numbers here of 2025 in terms of companies that have signed foreign government procurement contracts. We know that with President Trump and his tariffs, he went through that, and a lot of his tariff deals included, hey, you have to spend X amount or X billions of dollars with U.S. companies out there. Well, we now know that those deals were worth $244 billion in 2025. A lot of that was assistance from the U.S. Commerce Department on the backing of those tariff deals. How big is that? Well, it's nearly triple the amount that happened in 2024. Boeing is the biggest leader in this as well in terms of airlines. I should say Boeing, and airlines in general, building airlines is part of it. Obviously, engine manufacturers are a big side as well. So Boeing did log a massive increase in jetliner orders there in 2025 as well, which we talked about that a lot. 121 contracts were done in 2025. That was aided by foreign spending commitments, like I said, in those trade deals negotiated by President Trump and his administration. And then there was $206 billion in U.S. export content. And then support about all of these deals here will support about 844,000 American jobs being reported today. So if you want to go back to 2024, obviously different president at that time, different government philosophy. Well, they say they logged $87 billion in contracts signed. That was up from obviously the COVID area, which is still included here. It was up from that COVID area of $17 billion back in 2021. So we have seen increases over the last several years, but not a jump like we have this year or last year in 2025. So this big, huge jump that happened, obviously being led by that massive increase by Boeing. Net orders for them, 1,075 last year in 2025. It was at 377 in 2024. We know the reasons why, safety reasons why people weren't buying Boeing jets and they couldn't make them, etc. So that's 1,075 up from 377 the year before. Boeing, of course, with this rebound that they had last year, it's the sixth best order year ever. And of course, we gave you those stats before. They did top their Airbus rival there in net orders for the first time in 7 years with those amount of orders out there. So sales of Boeing planes, and then like I said, the engines, GE Aerospace jet engines. Well, that both of those combined made up about $215 billion of that total assisted government assisted 2025 contracts. So if you want to base that on the values released by the Trump administration, is where we're getting these numbers. $187 billion is an export value, is what they call that. The total included that record deal with Qatar Airways that we announced early last year. That was for that 210 wide-body 787 and 777X aircraft. That's valued at $96 billion just by itself, and that it does include the engines. Value estimates are on announced aircraft orders. Well, they're based on list prices, so the values will change because final sales and final prices for jetliners they can vary with negotiation style. Right? A lot of factors involved: customer size, the loyalty of the customer to Boeing. When are they going to be delivered? How fast do you need them? Can they be extended out? But then, even then, Boeing does put long-term maintenance agreements and things into these contracts for Boeing to get paid for that. So those all affect the prices. They just went off of list price here for these numbers as of right now. Uh, Other things besides airlines in these deals, U.S. locomotive maker Wabtec is what they're called. They signed a $4.2 billion contract. They're going to supply 300 heavy haul locomotive kits to Kazakhstan coming up in this September. That was a campaign that did take a lot of campaigning there, and even a phone call between President Trump and the Kazakhstan president as well to get that deal done. That is the largest foreign sale ever for Wabtec, who does those locomotive products. It's among an $8.3 billion in global infrastructure and supply chain projects won by U.S. companies in 2025 also. So we're seeing kind of the return of American companies signing large deals for our foreign counterparts out there. And we got final did numbers on that for 2025. By the way, on that airline side as well, some of those deals that we announced last year, some other countries' deals, well, they only counted them in those numbers that we just read off to you if the deal was signed. So they announced several deals at the end of last year that are still going to go through, but they weren't officially signed on the bottom line as of December 31st. So those big announcements will actually go into the 2026 numbers coming up as well. So just to give you an idea where we're standing at that point. And right, it's supposed to rain here in the valley over the next couple days, and a lot of rain from what they're saying. But there's a big winter storm rolling through the rest of America. It's going to affect us here as well. Yeah, they're setting the flares up to warn you right now, and you can expect your energy bill to jump in the next billing cycle, even months from now as well. And they're blaming it all on this winter storm that's coming across the country. The National Weather Service says widespread heavy snow, sleet, freezing rain, well, they're expected in a large part of the country starting today, carrying through the whole weekend through Sunday as well. Disruptive winter weather, like what you're about to experience in most of the country. Well, obviously, it can make your electric bill and gas bill immediately jump. Well, because of the surges in demand, right? Everybody goes to the thermostat at the same time to make it warmer. In the short term, household prices will spike for both natural gas and electricity because of that increase in usage coming up here this weekend. Electric heating, well, it's likely to experience a larger surge in demand. And that's just because in some areas, like the Southeast, for instance, they have electric heaters as opposed to, gas heaters because they don't get cold as much as you do like in the Midwest. And those gas heaters, I'm sorry, those electric heaters, not as efficient as the gas heaters are out there. So that's why energy side of things, electricity side of the energy bills, is going to see a little bit bigger spike here as well. This is going to affect our bills here in Arizona, folks. Natural gas prices have already been going through the roof in the last several days leading up to this winter storm. They have risen about 63% since Monday, folks. That's the biggest increase since December when that one went through. That big increase went through. Residential households, good news is you're not going to feel a huge price hike immediately in terms of you're going to see your usage price go up, but you won't see an actual price increase here for several months. The increases will gradually trickle down into the energy bills. Consumers who do heat their home with electricity, well, you'll see a similar impact on your long term bill as well. Adding to that longest term price increase for both heating sources, it could take about 6 months or even a year to show up completely throughout your utility bills. They'll just slowly increase it on you over the few months. So, these winter storms, they do affect us here. And obviously, we're cooling down as well, getting a little bit colder this weekend with the storm rolling through here. So, people are going to crank those heaters up a little bit. So, they're prepping us for that here with this winter storm, folks. And it's an interesting thing. Now, if you have family traveling or you're traveling this weekend with these big storms, just a heads up. I did this research for you. If you're flying anywhere, U.S. Airlines, they've already announced all over the news are the travel waivers, and what they're forecasting and planning on doing here with this winter storm rolling through most of the United States this weekend. It's going to disrupt air travel, so be prepared. If we look at travel booking app Hopper, they estimate that around 15,000 flights could be delayed because of the storm. They did note that a 17% increase in travelers adding disrupted assistance to their trips for this upcoming weekend. That means an additional 17% of consumers did that optional insurance to protect themselves, knowing the storm's been coming for a little bit now. So, in terms of the airlines themselves, Delta, they canceled flights on Thursday to select airports, specifically in Texas, Oklahoma, Arkansas, Louisiana, Tennessee. That's the hardest hit area as well. They obviously are preparing and they want to ensure the safety of the customers and their airline personnel out there as well. They did say Delta that they'll automatically rebook customers to the next best itinerary. They will offer flexibility to customers with existing bookings to change their travel with no fees. So Delta's making those moves. Southwest said it expects disruptions across the part of the South and the East as well. They are now saying that they're going to do flexibility to rebook, travel standby within a 2 week window to go to your destination, is what Southwest is telling people to look at. American Airlines, they're all going to be similar flexibility. Major hubs such as Dallas, Fort Worth, Charlotte that are getting hit as well. United Airlines issued a waiver covering much of the Mid-Atlantic, the Northwest, Northeast, and parts of the Carolinas and the Midwest there in the Ohio Valley area is what they're doing. So, including, by the way, Newark and Washington area operations, which are hubs there for United. Let's go to some airlines that aren't the big four. JetBlue, they said they did a waiver for the Northeast that covers New York and Boston area airports. They said they will waive change and cancel fees for customers traveling to and from a specific 11 cities for JetBlue. If you want to go low cost here, right? Frontier Airlines, they said travelers can request a refund if flights are canceled or delayed for more than 3 hours for domestic flights, 6 hours for their international flights. Now, the other low cost airline, Spirit, well, they announced they're waiving modification charges and even fare differences across 13 cities for travel between Friday and Sunday. So, give you what's happening here in the airline. Obviously, this is going to hurt the bottom line of the airlines as well. But they're big companies. We care about you, the common man out there, the consumer. So, you do have options this weekend if you're planning to travel to these areas that are getting hit with this storm really bad. So, be aware of that. Check with your airline and just be safe out there, everyone, if you are traveling now. And finally, the long national nightmare is over, folks. You might have heard a woohoo from your kids. Your kids might have a pep in their step today that they didn't have before. Not because it's Friday, not because it's the last day of the school week for them. No, TikTok announced yesterday that they have finalized that big deal to launch a majority American owned joint venture, which of course makes TikTok survive here. There's been an aversion of the potential U.S. ban on TikTok. It's called the Joint Venture LLC is what they called it. It's, of course, is built on that foundation of the TikTok U.S. Data Security Organization, USDS. It is going to satisfy all U.S. regulatory requirements that were established by Trump's executive order on September 25th of last year, allowing millions of American users and businesses, yes, all 200 million of you, to continue using TikTok. Doom scroll all you want this weekend, folks. Yes. By the way, the sister apps, things like CapCut, Lemonade, they're also going to be brought under the joint venture U.S. oversight company as well. So those two popular apps are also going to continue on as well. Under this TikTok agreement, American entities will hold an 80.1% stake in the new joint venture. The original parent company, the China one there, ByteDance, they're retaining 19.9% of the company as well. But the venture, how they get around this and meet the regulatory stuff, well, because the venture is going to establish a domestic cloud environment under Oracle. We've told you that before. So there's going to be robust data privacy and security measures. So your information will be more secure, they claim, than going through the app that was owned by China out there as well. So this new entity is governed by a 7 member majority American board of directors. It does include representatives from major investment firms, technology companies, as well. The president of TikTok, the one that was there before this entity was finalized, is on the board as well. But TikTok officially surviving. Your kids will be happy today out there. A couple Amazon stories for you here today. And this is interesting, these two dynamics together. First story, Amazon. Well, another job cut situation is coming for Amazon for their corporate employees. Amazon has been ratcheting up efforts to streamline their bureaucracy throughout their company. They do plan to start rolling out the terminations as early as next week. The layoffs, well, they arrive a few months after the company announced it was exercising 14,000 roles as well last year. So 14,000 cut, boop. Well, what we've learned since then, because at the time, Amazon, at that time, 14,000 roles, Amazon said that their cuts could come more so in 2026, more of them could come, because they're looking for additional places that they can remove layers and bureaucracy within their company. We found out since that time that managers were given a choice to make cuts in October or wait until 2026 to do the cuts as well. So now they have to do them here. A company employed about 1.57 million people as of September 30th. But most of those are warehouse workers, folks. That yeah, they obviously need that to get their products out, right? But the layoffs that we're talking about affect their corporate workforce. That has about 350,000 employees that they're looking to streamline. So you're not going to have bosses on top of bosses, bosses, streamlining that bureaucracy down. So Amazon continuing those cuts, so they're on that corporate level of things. And that's what's interesting here because Amazon, well, everybody's kind of moving away from brick and mortar, and everybody says online ordering is the way to go. I got an interesting stat for you coming up here in a second. But Amazon, well, they're trying to get into the brick and mortar world right now. They're trying to get an advantage over those big box rivals that they have. And Amazon is planning to open its largest ever retail store up in the Chicago suburbs. Will be the first one that they do. They found a 35-acre plot up there in the Chicago suburbs. And they're aiming to build a large 230,000 square foot property in Orland Park, Illinois. It can open as soon as next year. You know, they have to get through the approvals, guidelines, et cetera, and stuff. But they're looking at next year for an opening. It's an interesting store concept as well. Half the store, it'll sell a combination of groceries, general merchandise, prepared food. Well, the other half, well, it would be used for fulfillment of online and in-store orders. So huge building, half store, half what they do now, warehousing to fill orders out there as well. The store will be separate from the fulfillment section specifically, so you won't mingle between the two. Customers picking up online orders or third-party delivery drivers, well, they will have separate entrances from the retail store entrance. Online grocery orders will also be assembled in the back of house space rather than workers going and picking out items in the same aisles as the store shoppers. Like when you go into Fry's now, right? You see people, workers, they're pulling your online orders for the drive-up pickup and everything. You have to kind of battle them for the chicken, right? They're not going to do that here in the Amazon store as well. So look, they're trying to get into this side of things. Now they have to have a big meeting here in Overland Park officials. They have to have public meetings to get approvals and all of that stuff still. But the company, obviously, Amazon dominates the e-commerce space to the point where Amazon, Target, all trying, or not Amazon, Walmart, Target, all trying to catch up to Amazon in that space. Well, it's interesting because Amazon's trying to catch their competition in that, in business space out there as well. So it's kind of a weird, interesting battle here with these big consumer groups and companies. So the Amazon's trying to capture the share of shoppers who are going in store still. So the Census Bureau data came out. More than 80% of U.S. retail sales still occur in store. Think about how much money goes through e-commerce and purchasing on that side. And still 80% of U.S. retail sales occur in store. Amazon, so people say brick and mortar's dead. Nobody's buying that way. Well, 80% of us still are, right? 80% of those U.S. retail sales still are. So Amazon's trying to make the best of both worlds and get into that, in-store capability. So interesting perspective here on the retail side of things. And folks, we've had these stories all the time. Gen Z, younger generations, well, they're just not consuming alcohol as much as older ones. Older generations aren't as well as people are just trying to be a little bit more healthy out there, and it's affecting these alcohol companies and giant companies as well, not just the small ones out there. There's a couple giant companies, Stoli Group, USA, and Kentucky Owl LLC. Well, they are now officially liquidating their inventory here in the U.S. They're struggling. They struggled to reorganize under the Chapter 11 bankruptcy protection that both those companies went into. Their creditors no longer believe that the companies can successfully fix their finances to keep operating under Chapter 11. Now, so Chapter 11 is the one where it's meant to reorganize a business, keep it running, and pay down their debts as they go. Well, the creditors now are saying and formally requested to a court to end the company's Chapter 11 reorganizations, and they want to move the cases into Chapter 7. Chapter 7 is the full liquidation of assets and closing the business to pay off its debt. So, two large alcohol companies facing that right now. We know that inventory levels for alcohol companies, we see it with the big ones. Constellation Beverages is another big one. We're seeing it. They just are stuck on alcohol that people aren't buying right now, and their warehouses are full. They're cutting back production levels. Going to continue to happen here, but now we're seeing some forced liquidations, or at least asking the courts to liquidate some of these companies out there. When we come back here at McCollum on Business, we keep the show going. I spilled my Coke over here all over the floor. Got to clean that up today. Geez, Steve. We'll keep it going with the Market Watch. We'll look at stocks we're paying attention to as well, plus local stories you need to know as well. And we have a fun little story coming up at the end of the show as well about McDonald's out there. They say they're going the nostalgic way of things. We talked about that earlier in the week, but a little bit more specific here. So come on back. Local stories and that. Come on back, folks. McCollum on Business, Friday edition. And we're back here, McCollum on Business, folks. The Real Matrix, episode 14. The Angry Patriot does just ask you come into his show with a open mind as he shows you what's happening in the world out there and wants you to decide how you feel about it. But he wants to bring the information to you. That's the Real Matrix on demand right now. At episode 14 is up here at Robat TV. It'll be up around noon in the free podcast systems. And then we're doing something different with that YouTube page, so bear with us here over the weekend. We're creating a separate standalone YouTube page for that show. That will be up completely this weekend. So episode 14 won't be up on our page. We're going to do something different with our page with it, and it's basically round around copyright and some of that stuff out there. But Real Matrix on demand, Robot TV right now be on demand. Your favorite podcast system. Just search the Real Matrix. Noon today, it'll pop right up for you on your favorite system. Google, iHeart, Spotify, all of them. It'll be there for you now. Real Matrix coming up, episode 14 here today. And then, of course, the main event, 8 to 10 a.m. No Bruce Cooper today. He was scheduled on Tuesday, had to cancel because he was sick. Called last night, and he sounds just as bad as he did on Tuesday. He didn't make it in today, but me and Dale had a lot of fun today on the show, talking sports, of course, getting ready for this weekend's NFL as well. Join us in every day, Monday through Friday, 8 to 10 a.m. Of course, now it's on demand here at Robot TV on the YouTube page as well, and on your free podcasting system. You can search the main event with Steven. It'll pop right up, or even with Dale, it'll pop right up. Or at TME Sports Show will pop right up for you as well. Like and subscribe to that free podcast system on the YouTube page as well, folks, for those of you that want to go the free route in terms of viewing the on-demand product out there. Of course, when we're done here, well, we'll be done here, and we'll put it up on Robot TV on demand and, of course, on the free YouTube page as well. No podcast system for this show. Most of our audience is here at Robot TV, large audience. We appreciate you joining us. We're just getting it out to some other people as well. Just like subscribe that YouTube page, and of course the podcast system as well, if you would. Helps us get it out there and promote it a little bit, because we love all of our audience out there as well. So Pit Stop is coming back here as well. We got racing coming our way. The Clash, they said the format's going to be the same as last year in Bowman Gray. Well, and then NASCAR gets in the way early February. Then of course, the IndyCar on March 1st coming up. Pit Stop coming back to return here. You can see the episodes here at Robot TV. We'll promote out when it's going to be filmed, recorded for you. Of course, on demand here, Robot TV on the YouTube page. Does have a free podcast system as well at the Pit Stop is where you can find that. And that's also the social media for it at the Pit Stop as well. Excuse me, the Pit Stop Talk is where it's at on social media. Pop right up for you. Follow us there. Get all the racing-based news out there. Appreciate you just giving a follow and supporting what we do here as well. And with all that said, let's get right back into the Market Watch. Here on this Friday, yeah, everything's kind of struggling today, except for the NASDAQ. And I'm not sure why. NASDAQ's not popping up on our screen here today. I do have it in front of me, and I'll fill you in. But right now, Dow Jones still down that 335 points. S&P 500 is basically even today. A lot of that has to do with tech being way up today with that Chinese news, where some chips and some tech is being allowed to be sold in China now, according to the Chinese government. NASDAQ is the only one that is up today, majorly up, I should say. It's up 77 points right now for the NASDAQ, obviously led by the tech companies. Russell 2K is down, as you can see, 51 points right now for that small cap index here on this Friday. Bitcoin kind of rebounding a little bit, pushing 91,000 today, 90,730 for Bitcoin. Obviously trading in the 80,000, high 80,000 range here the last few days, but getting back to the 90,000 range here on this Friday. Stocks that we're paying attention to here as we go through this Friday show. First one is going to be Clorox out there. You know, the household cleaning products company, up 1.55% here today. It was up almost 3% earlier today. You see there's been a dip there here as that trading day has gone on. Well, they agreed to acquire Gojo Industries. That is the company that is most famous for Purell. That's how you would know this company. They're buying this company that makes Purell for $2.25 billion. Even with the announcement of buying Gojo Industries and Purell, well, Clorox did reaffirm its 2026 outlook, and that includes the impact of the purchase. They say they will still hit their numbers and their outlook numbers there. So Clorox was up 3% earlier today. Right now it's down a little bit to the 1.52%, still up on the day, but buying a large company for $2.25 billion dollars. A company that's near and dear to my heart, use it all the time with teenage drivers out there. We're talking about Life 360 is what we're going to talk about now. Look at this, folks. It was up over 28% earlier today. Right now, it's up 23.94% for them. If you don't know what Life 360 is, it's a location sharing application, is what it is. It tells you like where my kids are, does their driving statistics for my 17-year-old. It can also tell you where they are if they're out running around and stuff like that. Well, they reported that its monthly active user base grew 20% last year. So it's at 95.8 million users now, is what Life 360 grew to. Obviously, good news with that type of growth. The investors obviously like it. They also posted better than expected preliminary financial results for 2025 as well. So up 23.94% right now, Life 360 is. And then finally, Capital One is the last stock we're looking at here for this week as well. I don't like to end on a down note. I feel we have to talk credit cards a little bit here today, but Capital One is down, as you see, 7% here today. They announced, Capital One did, that it agreed to acquire a company called Brex. They're buying them for $5.15 billion. It's a deal that is going to be made up of 50% cash, 50% stock to purchase this Brex company. Down 7.11% off of that news. And then fourth quarter adjusted earnings did come up short also for Capital One. It was at $3.86 per share. Estimates were expecting $4.11 per share as well for Capital One. So some struggles here. I mean, they're buying a huge company here, company Brex here, startup company, for a large amount, $5.15 billion. I'd like to have a startup company that sold for that amount. But Capital One, not doing well today, 7.11% down based off of all of that news. Now let's get into some local stories here. And a company called DSV. Well, I read their press release yesterday as it was emailed to me, and they've officially broke ground on a new regional headquarters that they're building. They're doing that over in Mesa as well. They did that. They broke the ground on it this week. It's a $14.5 million investment. It supports Arizona high-growth industrial sectors. This is going to be a 950,000 square foot facility. That's huge, folks. It's going to serve as a hub for DSV customers and house all of their services offerings. Basically, air, sea, road transport services, even contract logistics is what they do out there. They do a lot of inventory management solutions, is what DSV is what it's known for. They do have plans to employ a maximum capacity of approximately 160 employees here at this facility, this regional headquarters. So Mesa, another large company coming in and building at least a regional headquarters in this case out there in Mesa. And then it was a fun week, I'm sure. Not. Sometimes I just wonder, like Arizona Corporation Commission, just what it's like to be on that board sometime, going into a meeting knowing people aren't going to be happy. Well, that happened this week because APS, right, Arizona Public Services, well, their proposed rate hike of 14%, well, it did have to get kind of in the face here, and criticism happened this week face to face. Well, APS held its public hearing officially on this. Residents were not happy on this 14% increase on top of an 8% just a year or so ago. Residents told the Arizona Corporation Commission that the proposed rates are not affordable. Last year, if you don't remember, APS filed for approval to increase their rates to that 14%. That's to be about $20 more per month for customers on their bills. APS, of course, argues that the hike is necessary to cover operating costs and grid maintenance. I had to say in the middle of that because it's just, I feel dirty just reporting on this. No APS, you're ripping off your customers. By the way, the fourth rate hike since 2017 for APS as well is what they're looking at. Now, the APS, and this, I hate this argument. I get why they say it, but I hate this argument. APS says the rates are still below the national average. So your race is to become the national average? How about you stop raising your prices on consumers homeowners, etc., and maybe get your money from the data centers, APS. But that was face to face criticism. There's like four more meetings coming up on this as well. Last time they asked for a 12% increase, what, about a year and a half ago? They only gave them an 8%. Folks, Arizona Corporation Commission isn't in your interest, they're in the company's interest. And they're going to get a price increase. It's just a matter of how big it's going to be, is the question moving forward for them out there. But more meetings. You can look up when the meetings are. I know the next one's a telephonic only meeting coming up, and then there's another face to face one. And I can't remember the other ones, if they're telephonic or if they are face to face. But still, four more meetings if you'd like to. If you're in the APS area and would like to voice your displeasure here of their continued price cuts that they do there. Hey, another company, ERMCO, they're set to open a new manufacturing facility, but this time not in Mesa, the West Valley coming up. This alone is going to create 500 jobs as well for the manufacturing facility that they're building. It's so ERMCO stands for Electric Research and Manufacturing Cooperative. It's an operation that they're building out there, and it's going to be in Waddell, 30 miles northwest of downtown Phoenix. If you don't know where Waddell is, it's basically northern 303 and northern, I believe, is the area that it's in. If you want to know where this factory is going to go, so ERMCO is a Tennessee-based company. They make liquid field distribution transformers for utility, commercial, and industrial markets. I don't know what that means either, but sounds technical. They're building this big facility, and it's the first facility that they've ever built west of the Mississippi River for this Tennessee-based company. Foundational work is going to start here in 2026. The building's expected to be operational in 2027 as well. So another company choosing Arizona because of its strong business climate, the labor market here, but also we're kind of in the middle, right? We have good proximity to, some of their customer regions, right? A lot of states around us we can get to pretty quickly there. So this project is underway as well. So another big facility coming our way in terms of the production side here in Arizona. And then finally, folks, we told you that story earlier this week on McDonald's, how they want to go toward nostalgic. They want to look at their pricing. They're going to revamp some things on their menus. Get a little bit more specific here, and we'll leave you with a little food story here as we head into lunchtime as well. A lot of people are saying, let's go back to way things were before: clothing, movies, remaking movies, all of that. Well, McDonald's focused on that, as we talked about that earlier in the week as well. But the newest Happy Meal toys, if I can talk, got excited for a second. Well, it's going to kind of take you back to the 1980s, folks, is what they're looking to do here. So, no official news release, according to USA Today here, but the company's senior marketing director did post yesterday on X. So, it's not an official thing, but a company person did post this. McDonald's changeables are back on January 27th. Yes, folks. Featuring updated versions of both the robot and dinosaur designs from the original three Happy Meal programs. These were released back in 87, 89, and 1990. Yes, Kobe, you don't know what the changeables were, but us youngins at that time, I was 10 years old. We know all about it, right? Kobe's in there going, what's so great about these things? So basically, these are like Transformers, as what they were. So they look like McDonald's food items. Remember, there was a hamburger one. I think there was a French fry one, if I remember correctly. Is what these were as well. Look, I'm gonna buy Happy Meals just to get these, probably. Yeah, and they basically turn into robots, dinosaurs, types of things. Is what they do as well. So interesting enough, in this X post, the McDonald's gentleman said changeables were by far the most requested Happy Meal program on X across social media platforms and through customer service. So people, when they asked, what can we do for you? People went, bring back changeables. Yes, they're going to be available starting Tuesday, January 27th. Be made up a collection of 16 characters to collect, and they're going to sell out quick. They're not going to make enough of them. Every single design has a name and its own little personality, according to the post. He did upload video as well showing individual changeables coming to the deal to McDonald's. So there is a post. If you just search McDonald's changeables, you'll see that pop up. He's got all 16 of them there as well for you to see. So January 27th, changeables coming back to McDonald's. And like I said, like everything else at McDonald's, like even the Monopoly things, like a month before the Monopoly was ending, you started seeing we have no more McDonald's cups. They're not going to make enough of them, folks, to get these, and they're going to be hot commodities with collectibles probably. But changeables coming back, folks. January 27th. Woo-wee. What if you can request them when you order them? Like, can I say, hey, I don't need that one. My luck, I just get the same one every time I ordered it. What do you do, right? Hey, folks, Friday edition McCollum on Business is in the books. We'll get this posted on Robat TV, of course, and on the YouTube page. Well, have a great weekend. Stay dry out there. It's supposed to rain hard and a lot here over the next couple days. At least we don't have the snow like the rest of the country does out there. So think of everybody there. If you have family in that area, you're planning on traveling, be safe as well. We'll see you on Monday here. Of course, Monday, the main event at 8 to 10 a.m. We'll talk football, of course, this weekend. We'll know the Super Bowl contenders on Monday. And, of course, McCollum on Business at 11 o'clock. So come and join us, would you? We'll see you then, everybody. Have a great weekend.